edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. I am Cesar Delgado. I am your host of today's program. We're glad you're here on today. Let's take a look for the commodities markets, especially with the grains. I'm joining with Ben Potter for the Farm Futures. Ben is a senior editor for the Farm Futures on today's program. We were talking about the commodities index and the world supply and demand report on next week from the USDA. Then we were talking about the commodities markets with Garrett toay from Ag Trade Talk. The grains markets are challenging to be in the red, but the cattle markets is getting ramp up to the markets. Cattle is still firm in the feeder cattle. Otherwise, this is your rural news sponsored by AgriGold in Central Illinois. It's time to prepare for the crop production for this planting season on this spring. You just make sure your crop insurance by March 15th. The Illinois Soybean Summit will be held on next week. They get some education information on the herbicides and pesticides to the crop production in the field. Finally, Lee Zidin is confirmed by the Senate. He is an EPA administrator. However, Jeff Cooper from Renew Fuel, congratulations to him. Some biofuel groups are considered for support of the ethanol industry in the United States. This has been your rural news for this afternoon. This is your commodity markets for this afternoon, sponsored by Kyle Bumstead. He's your commodity broker from Allendale Incorporated. The grains markets are down for today. Corn are down at 5 to 10 cents. Soybean futures is down at 3 to 6 cents. Wheat futures is down at 9 to 4 cents. Let's take a look for the livestock markets. Cattle is down at 5 to 10 cents. Feeder cattle is down at 3 to 4 cents. Lean hogs is down at 3 to 6 cents. Let's take the cattle weight for this Friday afternoon before the weekend, and steer prices are 206.56. Heifer prices are 207.61. The cash cattle is steady as today. This is your commodity markets for this afternoon. I'm joining with Ben Potter for the Farm Futures. Ben is a senior editor for the Farm Futures on today's program. We were talking about the commodities index and the world supply and demand report on next week from the USDA. Ben, what are you looking at the report from USDA? Could you tell us about that?
Okay, yeah. Well, the January report was quite a market mover in a positive way. So we were like pleasantly surprised about that. The February report usually isn't a big barn burner, but we kind of this is the time of year where we look at South American production potential. Brazil's harvest is off to a slow start, but they're still kind of expecting record-breaking yields. And then Argentina is kind of a mixed bag. They did get some much needed rainfalls earlier this week, but they've been really struggling with their crops so far.
What is your thoughts with the Brazilian crop for right now?
Yeah, that's the really interesting question right now, I think, Caesar. Uh, USDA in January predicted a 6.2 billion bushel harvest, which would be a record-breaking effort. But then there's some other entities that are anticipating even higher yields. For example, today there's a consultancy called Saffris and Mercado, and they're predicting 6.4 billion bushels. So it'll be interesting to see how all that shakes out. Most groups are predicting at least 6.2 billion, but yeah, there's some outliers there of 6.3, 6.4. So yeah, like I said, it'll be really interesting to see how that all.
Do you have any updates in that country?
Yeah, excellent question. Like I said before, I think hot, dry weather has been sort of the headlines that we're getting from Argentina. So it's kind of hard to be too bullish about it. But like I said, they did get some much needed rains earlier this week that'll help. Certainly, I think only 60% of the production area actually got any rainfall though, so there's still oh, let me look it up. I was just writing about this. 30% of the current crop is in regular to poor conditions, so that's still kind of concerning for Argentina's crop. Definitely not going to have any sort of bin busting yields coming from there.
Do you cover the Brazilian crop production and Brasileiro currency for the farm futures?
Yeah, we do. We like to keep tabs on Brazil, especially at this time of year with harvest coming online. And again, they actually produce more soybeans than the United States at this point. So definitely our biggest competitor on the world stage. Um, yeah, I can't really speak to the currency. I can speak a little bit to logistics. They're in a constant struggle just getting the grain from the farm to the ports. There's always road problems, there's trucking problems, there's always bottlenecks. So it's interesting to see as that crop gets larger and larger, they're going to definitely have to invest more to protect that investment.
What going on with their ports issues?
So it's not necessarily a port problem, and they've actually invested like hundreds of millions of dollars in updating and modernizing their ports. It's more of the transportation of getting uh, trucks to ship the grain along not always well maintained roads. So a lot of I was surprised to see that aside from a few main highways into the interior of the country, a lot of Brazilian roads are still gravel and susceptible to flood washouts and stuff like that.
Well, like a dirt road.
Yeah, I mean they still have a ways to go. I feel like in modernizing their transportation sector.
Do you have any final thoughts on the corn production from the world supply?
Yeah, I've been thinking about this a lot lately. There's global corn supplies are always robust. There's never an issue of running out or um, being supremely low as far as the production side. So it's interesting to me to look at where the demand is. So we're the US is a major supplier of corn in the global market, and there's a few other big players in that area too. And then on the demand side, North Africa buys a lot, Southeast Asia buys a lot, China obviously buys a lot. Um, Even Europe is buying a lot of corn, importing a lot of corn. So it's just interesting to see um, that flow, and it's as we come into a new administration, we'll see how trade and tariffs are emphasized moving forward. But yeah, there's a lot of there's a few major suppliers, but there's a lot of potential demand out there. So it's all about just keeping U.S. corn competitive on the global market.
What is your thoughts on the ag outlook on February 26th?
Oh, right. I guess I'm in kind of a wait and see holding pattern. I just actually booked travel to go to DC at the end of February for the Ag Outlook Forum. I haven't been in a few years, so it'll be great to connect. Our policy editor, Joshua Bathage, will be there too. So yeah, it'll be good to get our boots on the ground and kind of see what's happening firsthand there.
Thanks, Ben.
Oh, of course, Caesar. It's always great chatting with you.
This has been Potter for the Farm Futures on Back Roads of Illinois. We were talking about the commodities markets with Garrett toay from Ag Trade Talk. The grains markets are challenging to be in the red, but the cattle markets is getting ramp up to the markets. Garrett, we were seeing the cattle markets for right now, but the corn and beans in the red. What is your position on the corn markets, especially in the technical side and the beans markets?
Sure. So we're seeing some profit taking, I think, in the weekend. We were down about 8 cents here on the front end. We came within 3 to 4 cents of trading $5 on the front end. But I do think we saw profit taking, and we saw heavier farmers selling when we got to those levels. 508 and a quarter in March corn is a 100% retracement of the move back to those May 2014 highs. Earlier this week, we saw buying on weakness, and we just really didn't see a whole heck of a lot of that today. But with the move towards $5 and July beans towards $11, it just feels to me like you see some profit taking here. And then fundamentally, I think you have better improved weather for South America, which should be a better harvest window next week. And then you've also had more threats of tariffs potentially. This part of the negotiation that the headlines impact the algos and create nervousness, if you will. But earlier in the week, the trade war with Canada and Mexico lasted all of about 6 hours, but everybody got worked up about it.
What is your position on tariffs for this week? Some traders are selling for next week, Garrett.
Yeah, I think you're exactly right. We started out with tariff threats to Mexico and Canada, and for lack of a better term, folded relatively quickly. China has been more steadfast. They didn't. It was a positive sign they didn't, retaliate against soybeans, but they're playing things very cool. And then here today, there's talk of tariffs against Japan, Vietnam. So that's obviously it's expanding. I think ultimately Trump wants to use tariffs to help cover this U.S. deficit and as a revenue source potentially so that he can cut taxes. So everything is on the table here, I think, as far as trying to level trade imbalances.
How is the beans futures for this morning session?
Beans were under pressure today. We like I said, we traded July beans $11 midweek, and that was kind of the high of the market. I'm of the opinion that there really isn't a story in soybeans. Corn is the story. So if corn's weaker, then beans will kind of fall apart here. But we traded March beans. The 200-day moving average is here at 1069. We tested that Wednesday and failed, and then we were kind of lower the last 2 days. But the weather forecast in South America look less rainy next week, which would potentially aid in some harvest progress and alleviate some of the tightness in front end cash soybeans that has been seen down there.
Do you have any concerns about this summer? It's going to be in drought.
Possibly, yeah. I mean, it's kind of one of those things where it's tough to forecast a drought in January or February. But I think that it's something you kind of have to keep an eye on because we've really been dry since last fall. Too dry to the point that too dry to the point where we were unable to get anhydrous on because there wasn't enough moisture to seal everything up. So, it's been dry since August, and really we don't have any snow. So the pattern really hasn't changed any. And we had some areas here last week that had record highs, and back in your mind, I remember the last time that we had high new records in February and March, and I remember what that summer brought. But I think what it means, big picture, is for your listeners, is that we've had a $1.10 rally in corn over the last 45 to 90 days. And I think the farmers been aggressive sellers here. I think they're probably, I think for the most part, if I were to venture a guess, I would say the U.S. farmers probably 75% sold on their corn market, on their old crop corn. And so that being said, the USDA probably, given the ratio that we have out here, prints a pretty big corn acres number at the end of March. That may set the market down a little bit, but if this market has any sort of semblance of weather this summer, and the farmers fairly well sold up, things could get very interesting. So what we're recommending on producers, if we get a setback here at some point, we're going to look at some defending some sales that we've already made. Don't want to break the bank on buying some calls or anything, but just some upside protection here for a summer weather event.
Of course, Garrett, we will see. What is the fundamental on the cattle markets with the feeder? The prices are high. What are your thoughts on that, Garrett?
Well, I mean, obviously things are tight. We've had a cattle on feed report. We've had a cattle inventory report, and the heifers. It looks like we're starting to feed some. We're starting to retain some heifers. The market maybe have told this to us about 45 days ago when we saw the deferred feeder market kind of explode a little higher a little bit. But if we are starting to retain heifers, that tightens up the fat cattle market a little bit, but it starts to tell you that we've gotten to levels where we're starting to rebuild the herd and we're maybe starting to repair this thing a little bit. But if we're feeding less heifers out on the feedlot, obviously that means less beef. But we're going to have to feed these fats heavier. And I think that it also doesn't really do anything to the front end. We've had the big sell off here in fats to end the week, but the front end spreads are still firm, which are reflective of the tight cash situation.
How is the cash cattle side?
Cash cattle today, I think it's fairly steady. I saw 208 last week, and I don't think we've actually had any trade yet today. It's been really, really quiet. So, let me check something real quick while I've got you here, but I don't think we've had any. No, I have not seen any cash cattle trade here today. So I'm going to call it probably steady on the week and go from there.
Of course. Do you have any final thoughts on the tariffs and the world supply and demand report?
Yeah, I think that well, typically the February WASD is ho hum. There's very minimal changes to the U.S. S&Ds. It's largely a South American report. I think the market's expecting lower Argentine numbers and mixed Brazilian, well, called Brazil corn steady and Brazil soybeans up slightly, small numbers. But the fact of the matter is um, we're just keep creeping closer and closer through Brazilian harvest. We'll see how the market absorbs the Brazilian selling and not only just the Brazilian selling, but how the Chinese purchases take place through this next 40 to the 60 days.
Thanks, Garrett.
Yeah, thanks for having me. I appreciate it. It's always an honor to be on your show.
This is your commodity markets with Garrett toay from Ag Trade Talk. Thanks to Ben Potter for the farm futures and Garrett toay from Ag Trade Talk. Thanks to listening on this afternoon. This been Back Roads of Illinois. I am Cesar Delgado. You have a great day.